Hello and welcome to the special earning coverage Q2 with BQ on Bloomberg Quint. We are joined by the management of Apollo Hospitals. Joining us is Mr. Akhileswaran. He is the Group CFO at Apollo Hospitals Enterprises. Thank you so much, sir, for speaking to Bloomberg Quint and joining us. First of all, I would like to ask you on the second quarter earnings. We have seen a moderation of growth in the hospitals business, which has seen almost 5% kind of a growth, and bulk of that has come in from new hospitals. And not the mature hospitals. So how do you see the growth trajectory moving forward, and do you think mix-wise the new hospital revenues and growth will contribute more moving ahead?
No, actually it was a very robust all-round performance that we had across all the segments, hospitals, standalone pharmacies, as well as our retail healthcare format. So if you look at hospitals to begin with, the performance was not 5%. 5% was the volume increase year on year that we saw for the H1. But if you look at the growth, the top line growth was 11% for hospitals for the quarter. And if you look at the breakup of the 11% was 23% growth was obviously from the new hospitals, where we have added almost around 13 new hospitals in the last 4 years now, with 2,400 new beds. And it was in line with our expectations that the growth of the new hospitals, as we see, will be obviously faster than the mature hospitals. The mature hospital also was a healthy 9% growth. So the 5% that you're alluding to is actually the volume growth that we saw during the half year. If you look at the business overall, this quarter we reported 2,090 crores of revenues, and the growth was 15% on the top line for Apollo Hospitals standalone. 2,400 crores was the consolidated revenues that we gave. And if you look at the EBITDA growth, EBITDA has shown a 17% growth to 258 crores for the quarter, and PBT, the profit before tax, has grown by 19%. There was a higher, effective tax rate for the quarter because last year we had the benefit of the Section 35 AD, which we could apply for the new hospitals. That now not being there, we have a higher effective tax rate of 33%, which is why the PAT growth was still 11%. So I think it was a good quarter for us overall and a well-rounded quarter.
Okay. And sir, talking about the announcement regarding the segregation of the front-end pharmacy business, if you could tell us what is the rationale for this, kind of restructuring?
So, standalone pharmacy has become a very significant portion of our overall strategy. If you look at it, it's now at an inflection point. Over 45% of our revenues now comes from standalone pharmacies, and we would be, ending this year with close to 4,000 crores of revenues just from standalone pharmacies itself. So we thought that the board thought that it was time that we had a separate focus and attention that was given to the standalone pharmacies, because, as you know, we have said that over the next 5 years, we aspire to take it to a 10,000 crore top line with an ROC of 30% and top of the line EBITDA margins as well. So clearly there is a separate focus and attention which is now being given for standalone pharmacies. A. B is there is a very strong and significant focus that we are having around the private labels itself, which we expect to grow from the current 6% to 12% in the standalone pharmacy segment. And additionally, if you look at it, we also wanted to, over a period of time, set up the platform for value discovery in this segment, because in current structure, it doesn't allow us to, have a value discovery option or unlock value for our shareholders. This potential structure now helps us to potentially unlock value in this over time.
Okay. Sir, I was just going through a couple of research reports, and analysts do believe that the deal is not accretive since you have promised some investors a 15% IRR, which is internal rate of return guarantee. What would be your comments on this?
That's not correct. If you look at it, just so that you get the whole deal perspective right, what is happening is the front end of the standalone pharmacies is being housed into a separate SPV, where we have investors which are Indian owned and Indian controlled investors who will own over 75% of that SPV. So that SPV will, if you look at bulk of the revenues, because, Apollo Hospitals Enterprise Limited will still be the exclusive supplier to the standalone pharmacy front end business. And because we are going to be the exclusive supplier And we also are going to be having a strong brand licensing agreement with the standalone pharmacies front-end business. 85% of the value of the business is still going to be captured or continued to be captured in Apollo Hospitals Enterprise Limited. And in fact, 90% of the cash flows are going to be still residing with Apollo Hospitals Enterprise Limited. So clearly, if you look at the front-end business, it is making it help us, do the business, get into digital commerce, get into our omni-channel strategy in a regulatorily compliant manner. And in fact, we are quite confident that this is value accretive to our shareholders. And over a period of time, which is in the next 3 to 5 years, you will see us that this would also help us unlock value in this business, which should again give a uplift to the overall shareholder value.
Okay. And sir, if you could share the performance highlights for AHLL.
So AHLL, if you look at the growth has been quite stellar. 28% has been the top line growth that we have seen in AHLL. This year they should end the year with almost around 600 crores of top line. More importantly, there have been EBITDA losses in this business because there have been startup costs and costs related to infrastructure, lease rental, etc. All of that, as the business grows, we have been telling our investors that by Q2 of next fiscal, which is FY20, that business will break even on EBITDA front. The trajectory has been quite good. This quarter, which is Q2, we ended with a 13 crore EBITDA loss. And this is a significantly lower than the EBITDA loss that we had in Q2 of last year. So the trajectory is quite strong. And the retail business, all the businesses there, the diagnostic business is growing very well. The Cradles business has been promising. The daycare business has also grown. So we are seeing that there is good traction in the overall business parameters or fundamentals of Apollo Health and Lifestyle, and we are quite confident that this is a format for the future that we are building in, and you will see this becoming as relevant as any of our other businesses in the next 3 years.
Okay, good to know that, sir. And one final question on your total Capex plan in the next 12 to 18 months, and also if you could share the performance and the operational update for the Navi Mumbai hospital as to how is it doing.
So, the Capex plans, as you know, we are at the end of our Capex cycle. We have added 13 hospitals in the last 4 years, as I said, with over 2,000 crores of capital employed. Clearly, the opportunity to get 2,000 crores of top lines and with a good EBITDA margin from all these hospitals over the next 3 to 4 years is quite strong, which is what we are all focusing on. There is only the last leg of the Capex requires us to complete this, the new the proton therapy cancer referral center based out of Chennai, which we believe will be one of the best cancer centers available for this part of the world. This is the last Capex from our stable, which should happen by in the next quarter or quarter and a half, and it should go live by Jan 2019 based on our current plans. So the overall Capex which is pending from our side for this is around 300 crores. Over that we don't have any plans at this point in time, and our focus is on seeing how we can improve our overall hospital ROIs and our business ROIs to mid-teens over the next 4 to 5 years.
Okay. And sir, about the Navi Mumbai hospital, as to what is the update there?
Navi Mumbai hospital has ramped quite well. I think the occupancy from a 100-bed occupancy that we had last year has now crossed 180 beds in occupancy, and which is quite strong. And we are quite confident that even as we move into the next fiscal, we are quite confident of accelerating the growth, because obviously we have a very good set of doctors there, and most of them have come from abroad and are very well read and are very proficient in their way of work. We have very good neurosciences department. We have a very good transplant department, cardiology department across the spectrum, be it ICU. We have very good departments there, and we are quite hopeful that it will do well for us as we move on with time.
Okay, and we wish you all the very best for that, and thank you so much, sir, for speaking to Bloomberg Quint.